One of the biggest problems emerging managers have is they don't have the know-how or the expertise on how to spend their time. They believe a lot of conventional wisdom when a lot of it's not true. So my name's Guy Costin. I'm the founder, CEO of Dakota. Me and our investment sales team have created a show called the Emerging Manager Growth Show. What we do on this show is we demystify everything that a lot of conventional wisdom comes from. And the whole goal is for an emerging manager to be able to do more with less. And you have a very experienced team in myself, and I have each one of my team members on. We break down all the tips and tricks and techniques for exactly what an investment salesperson and an emerging manager should be doing to help grow their firm. Join us for another Emerging Manager Growth Show. This is one you're not going to want to miss. Hello, my name is Guy Costin, founder and CEO of Dakota, and the Dakota Way is officially live on Amazon, where you can buy it right now, both Kindle and soft copy. The Dakota Way covers the 4 core principles of investment sales, which is 1, set expectations, 2, know who to call on, 3, know what to say, and 4, have a killer follow-up system. These are our internal nomenclature for how we describe the things that we should be doing to become world-class fundraisers. It's all in the book. It's incredibly simple, which is the good news. You can buy it on Amazon. I promise you it works. And if you have any questions, you can always email me at guy@dakota.com. The book's available at Amazon right now, both in Kindle and softcover. Thanks so much and have a great day. What is up, everybody? It's Guy Costin. Welcome to the latest episode of the Dakota Way Sales Coaching Program. I'm joined by our president, Dan DiDomenico. Dan, welcome.
Guy, thanks for having me. Excited to be here.
Great. So just to kick it off, the book dropped in February, The Dakota Way. And if you would like a copy, simply email me at guy@dakota.com and I'll send you a signed copy. So, Dan, for those of you that might be new to the Dakota Way Sales Coaching, there's not really any investment sales coaching or a book. We've done it. We work in an industry that's kind of opaque when it comes to best practices of how to do your job from a fundraiser and a capital raiser, however you want to say that, sales, business development, but just basically raising capital for your funds. And we've been following this program since 2011, right? We put it in place in 2011. We finally wrote the book. It's a very simple book. The concepts are very simple. They're proven. There's no BS. There's 4 core principles with 3 sub-principles underneath each one. In life, there's very little that you can control, right? We've come up with the 16 things that you actually can control that are totally within your control. And that's what we teach, and that's what we act on a daily basis. And this doesn't just work for fundraising, but it works for software sales because we do the same thing. So, Dan, let's kick it off. So the umbrella concept is focus on what you can control, right? But core principle number 1 is where most salespeople fall down and get killed on what I call the law of 18 months, right? They don't set expectations with their boss. Do you want to talk about your impressions of when I bring that up, how, what visceral reaction you have in setting
up? My immediate
expectations?
reaction to that is it's a sad state of that cycle that investment sales professionals can get into, right? That 18, 24-month cycle of going from one place to another. And a lot of it has to do with not setting expectations, not sitting down and defining what does good look like. And being able to say, here is what I set out to...
A written sales plan, you're saying?
Written sales plan.
One page.
Sitting down with your boss, if it's a portfolio manager, if it's a CIO, or if it's someone that's actually leading the sales organization, having that one-page plan to say, over the next 18 to 24 months, here is what I set out to accomplish. Here's what I'm going to set out to accomplish. And in that way, when you go back on a weekly or bi-weekly basis, you can show progress. Because otherwise, if you have a mismatch between what I think is good and what I think success is going to look like over that next 12, 18, 24 months, and it's different than what you think success is going to be,
Yeah.
then now we're just getting off, and we're so separate in terms of what the proper expectations are. We all know what real success is, and that's raising assets.
Right.
That's what we're all endeavoring to accomplish. We want to raise assets. We want to be the one to bring in the big new account. That's what we're all targeting. That's our objective. But how do you get there? And how long will it take? And what is it that can show along the way as progress against the sales plan? So then I'm not on that constant treadmill of every 24 months looking for a new job.
And that's exactly right. So what we're recommending is you put yourself in a box, you put yourself in a straitjacket. You write a one-page business plan, and weekly you sit down with your boss and show progress against the plan. Why do you need to do that? Number one, if you don't, your boss is going to think you're playing golf all day long. Number two, you need to force yourself to show up with a pipeline. If you know every Wednesday at 9 a.m. you have to sit down with your boss and go through your pipeline, I know you're not going to show up with a bunch of blank white paper, right? You're going to have a pipeline that shows, right, and you're executing against the plan. So it's easier because this show is really focused to the individual who's a one-person salesperson at an investment firm, okay? Because there's probably not the infrastructure there to protect yourself from yourself. So you have to create the protection for yourself. We're recommending you set expectations, the one-page business plan, you report weekly against the plan. That works. So that's core principle number one. It's in the book. And I don't know exactly what episode we're on in the sales coaching, but it's all over the platform.
Yeah.
So that's numero uno. Now, number two, because you have a plan, you now need to go execute the plan. Mm-hmm. And Dan, talk about establishing the TAM, talking about how you got to find your best fit channels.
Yeah, and this is, we always talk about efficiency, right? How can we do more with less? I think this is such an important part of that, is understanding and doing the work on the front end to understand where are the highest probabilities of your strategy fitting, either based off of track record, vehicle, size, and there's a lot of different factors that would play into it for you to be spending your time where it'd be most meaningful, highest probability of you being successful.
Right.
So that's identifying the appropriate market product fit for your strategy.
Yeah, and the example we always use is if you have a mutual fund now, probably an actively managed ETF,
Yep.
separate account, RAs, banks, broker-dealers are the perfect
ideal profile of a natural buyer of your strategy.
Yeah, and
apples to apples buyers.
Right. And we're just going to throw in a little spice here, okay? If you have an LP and you're listening to this show and you're saying to yourself, well, what we really need is in order to market to RAs, we have an LP, we need a quarterly tender fund. No. Okay? In our database, if you look in the Form ADV, RAs have to file, if you will, if they have a fund of funds, meaning they'll be one investor and they'll put other investors in their own fund of funds. So I think there's just under 400 RAs that have their own fund of funds, internal fund of funds, which means they can use your LP. Okay? So don't use that as an excuse that you can't go wealth or retail, or however you want to call it. You can.
Yeah.
And we have the data.
We're past that.
We're past
those
that.
Days are
those guys will invest. And you're probably seeing, if you look at the benchmarks, better performance in the LPs versus the evergreen, right? You guys can do your own study on that. My point is, an LP is fine to go into the RA channel. So let's talk execution now. So core principles number two is defining your TAM, where you're going to focus your sales efforts. Then the second component to this is, okay, how do I go about doing that? The way that we recommend and the way we talk about, Dan, is city scheduling. Yeah. So talk a little about city scheduling.
Well, first, you want to have data, right?
Yeah.
I mean, you have to have the proper data. Again, talking about means of efficiency, the better your data, the better understanding of who the targets are that you're going to be reaching out to, obviously, the better.
Yeah.
That way you can spend more time on execution, city scheduling. So this, for us, it's a great way for anybody, but we've always had this as a core principle to how it is that we cover the channels, is having 5 different cities on a calendar at any given time, looking 3 weeks out, scheduling for that city, because this forces you to cover those channels that you've identified in those cities in depth.
It gives salespeople purpose every single day, because just by what you just said right there, you're going to have 25 slots that you're going to have to schedule for.
Yep.
And you got to gamify it. You have to make it a game. You have to have fun with it. Now, in order to have success city scheduling, you're going to have to send cold emails. And then it's in the book, but when you talk about cold emails, there has to be that subject line that says meeting request. And then you have to have 1 to 2 sentences on who you are, what you do, not a paragraph. Just pack the punch so if they read it, they can instantly know who you are, what you do. And then they're going to probably drag that into a folder in their Outlook. And then the third component is you must have a clear call to action. Can you meet May 14th at 3 o'clock? It can't be multiple days and all this stuff that creates confusion and has them have to do a lot of thinking and a lot of work.
Make it easy for them to understand who you are, what you're asking for. Make it easy for them to respond.
Yep. Perfect. So that's core principle number 2, defining your TAM, using city scheduling to execute, and having your emails. And if you send 50 emails and you're getting 0, then you got to go check your email. Make sure it's an art form. You've got to tweak the email, and it has to be very easy to understand. And then for them to say, yes, I can meet May 14th at 3 o'clock.
And that's where the fun comes in, right?
Yep.
As you start to see progress against that, and this is what you're going to be reporting back with the expectations that you clearly set with your boss, you're going to be able to start to show that penetration rate.
Yes.
Right. And you're going to see that grow and progress over time.
100%. And just before we close this, Dan, there's no shortcuts. There's no mass emails. There's no easy way about this. This is a bespoke, individual emails that you're sending to book meetings. Now, as we move from core principle 2 to 3, this is now in the meeting. Okay, so you've done the work to schedule the day in Cincinnati, Chicago, New York, Boston, wherever you are. Okay, how do you maximize and pack the punch to make sure all those meetings, right, bear fruit in terms of somebody really connecting with you? And so we always think of 4 components to a meeting. Now, Stacey Havener was on our Rainmaker podcast. She took the allocator meeting to a level of depth that I didn't even know existed. It's so extraordinary. That's a must listen.
Great interview.
It's a great interview. She's incredible. We have simplified it down to sort of 4 sections of a meeting. Now, we believe that you can, we're giving you the rocks and the stones. You can pour sand and water and all your personal components to this. But in a very simple way, you want to make sure, number 1, Dan, those first 2 minutes, that in that meeting, when all the niceties have gone away, that you're able to center the conversation and communicate to your prospect who you are, what you do, why they should care, so they know,
immediately you're centering the
conversation. What they should be listening for.
Okay, now I understand who you are, what you do. Let's get into the rest of it.
Yes. Then what a lot of people fail to do is you need to ask them, what is their investment decision-making process look like? And they all have an investment decision-making process. If you don't know that before you're going to get into your Q&A and a conversation about investment process, philosophy and process, you're going to be at a huge loss. So make sure, you're ask a simple question of, hey, what is your investment decision-making process?
And it opens up the conversation. It gets them talking as well. It gets them engaged in the conversation. Versus just being very one-sided of you presenting and just sharing information, and you could be all over the place and may not be hitting on the key points that they want to hear.
Yeah, and no book. Let's not leaf through the book. That's not how you do it. You're here to build a relationship. And as Stacey Havener said for her behavioral science, you win if they can be talking 70% of the time. That's the goal. Yeah. Okay, now part 3 is getting into a Q&A. Short answer first, having a conversation about your investment philosophy and process.
Yeah. I think you just hit something. I'll make sure we don't glance over that. Short answer first.
Short answer first.
Allow them to take you deeper into a question maybe that they asked, and if they want something more detailed, that's going to allow it to be more engaging versus you just giving them the 30-minute response and talking about a given stock or a given property, whatever the investment may be.
Yeah.
You want to make sure you're giving the short answer first because they might have a longer agenda of questions they want to touch on, and maybe the short answer is all they needed for that point in time. To get to the other stuff, we only have, hopefully, you have 60 minutes.
Yeah.
And how are you going to make sure that you're using that 60 minutes, being most productive? Starting with the short answer is critical.
Great. And making sure it's a back and forth. The short answer, right? It has to be a tennis, right? It's got to go back and forth. A lot of people get stuck with a PM right, who are very analytical in nature, which is what makes them so successful. However, the downside of that can be maybe going on a little too long, right? I'm saying that in a very kind way.
Exactly.
Is that, and it happens to us all. And then how do you pull them back?
Yeah.
Right. And it's really the responsibility
That's our job
of the sales and marketing person to be able to say, hey, right, get them either refocused, answering the question, interjecting, what have you. That's the maestro in this.
We orchestrate that. I would also say on the front end, this is where your preparation with the portfolio manager comes into play. Is you're thinking through, what is my objective in this meeting? What do I want to make sure I leave behind? And it can't be a long list of 25 different things that you need to make sure you get across. It's 3 things, 2 to 3 things. Like, what do I really want to make sure in this meeting that we're impressing upon whoever it is that we're talking to? And it's going to change, right? From meeting number 1 to then interaction number 2 to meeting number 3. So you want to make sure that you're keeping track of that. So that's where the notes and the follow-up certainly come into play. But each meeting, you have to have a very clear goal and objective that you communicated to the portfolio manager as well.
Right.
If that's who you're with, these are the things that we have to get to and that we want to spend time on. So that's going to obviously help with the building of the brand, establishing that relationship, knowing that you're not going to get the sale in that one first-time meeting. Right, but what is it that we will make sure that we get across, that we leave them with in that meeting?
Yep. And what that translates into is you're a storyteller, right? Because you're selling to somebody who has to sell to someone else, has to sell to someone else, to eventually sell to an investment committee. You want to be a storyteller. You want to be telling stories. What a company is going to earn in the current quarter is not a story, right? You want to tell the story of how you go about investing, right? How your team interacts. So really think long and hard about what is your story, and is your story retellable? Is it very easy to understand? Is it memorable? And then so people can then retell it. And that's the art of storytelling, is telling people what they want to hear. Now, to close out the meeting, which a lot of people don't do, and we're probably in the 0.1% here, is you have to get a sense of exactly where you stand by asking the 2 tough questions. Mm-hmm. You need to leave the meeting knowing exactly where you stand. Some people like to say, well, Guy, people are a little coy and they do this and that. I said, I got it. Okay, I'm not here to argue right this point. This is for everybody's benefit. Simply ask the 2 tough questions. And Dan.
Yep. Question number 1 is, do you see this as a potential fit for your clients, your asset allocation program? Would we one day be able to work with you, our strategy in what your philosophy and your asset allocation program for your clients?
If it's a no, mailing list. If it's a yes, then you simply ask.
Do you see yourself having a search where you'll be making a change or potentially allocating to our space in the next 12 to 18 months?
So asking, hey, is there an opportunity in the
6 to 12 months, right? 12 to 18 months. You're just trying to get a sense of timeline.
And it's a very fair question to ask. Now, and then if it's a no, mailing list. If it's a yes, then it's like, okay, what information do you need from me as a follow-up and a next step to better familiarize you with our investment strategy?
Yeah.
Now, when I interviewed Julie Moore at AIMSy a couple weeks ago, she did say, hey, that's great, Guy. I like that. But sometimes I'm doing so many meetings as a consultant, I actually just would like to do a follow-up 15-minute call for key takeaways. And so you kind of book the meeting there, because you can simply say, or if you're not prepared to answer the questions, which I totally get, could I schedule a 15-minute key takeaway call and feedback from our call, which a lot of consultants like to do as well. Yeah. So there's that little nuance to it.
Yeah, I like that.
So opening up with 2 minutes, centering the conversation, asking about the investment decision-making process, getting into Q&A, closing with the 2 tough questions. That's core principle number 3. So now, to close out, Dan, core principle number 4 is the leverage.
Yeah.
Right? And this is really the killer thing. You need a killer follow-up system. You need to utilize technology to track all this activity and manage your business, if you will. This is the time when I say you are now Guy Costin, Inc. You are, Susan Smith, Inc. You are your own business. Act big. Act like you're a very big organization which needs structure to give you the 10x leverage. And so let's talk about just simply getting in the meetings you've scheduled and the call notes into a CRM like a Salesforce or something to be able to manage all of this activity.
Yeah, it's critical. Honestly, we call it the leverage within our business for a reason. because all that meeting, all that information that you've just gathered and collected, you're on to the next city. And very quickly that week turns into a month, and all that information, if it doesn't get into a CRM, it's gone.
Right.
And you have to have the information, not only, and this is going back to core principle number 1, right? We want to make sure that we're developing reports with the quality of information to report back to our boss, to be able to show them the progress. Here's what was said. It's going to feed directly into a pipeline. But getting that information then for our next outreach, for that next time that we're going to be in front of that allocator, that prospect, we have all of the notes, we have all the history. So now it's a full extension of what we just did prior. You don't want to constantly be restarting and not remembering, all right, what did we cover, right? This is how you're going to be able to clearly set those objectives for the next interaction, for that next meeting, is based off of the notes that you're able to put into your CM from the last time.
Yep. So getting those meetings you've scheduled into the database, into the CRM, allows you to create past activity reports, yep, which trigger sales actions. Yep. And then you absolutely want to get a few sentences at a minimum of what happened in the meeting so you can then remember.
Correct.
Right? Because if you're doing this many meetings, you're doing city scheduling, it's going to become all-encompassing and too much information to track. And then lastly, as a component to this, you want to be able to create opportunities and opportunity pipeline reports, which you will use to report progress weekly to your boss. We recommend creating 2 custom text fields. One is current status, the other is next step. And those have to be filled out. You want to know what your current status is and next step, and then you run your pipeline report based upon the highest stage, which could be for us as finals, where you're in a finals, or red zone, and then so on and so forth. You're reviewing that on a daily basis, and that's really your guidepost, because you're always trying to take the ones below and move them up. And the past activity is prospecting, whereas pipeline is your opportunities. And this is how you can 10x leverage your time. So with that, just to very briefly recap, the main core principle is focus on what you can control. Focus on what matters most, all these things you can control. So number 1, set expectations with a sales plan, reporting against the plan. 2, core principle number 2, know who to call on, establish your TAM. Use city scheduling to execute with the perfect emails. 3, become a master messenger. That's in the meeting, making sure you're choreographing the meeting, following the 4 steps within the meeting so people can hear your story, remember your story, and retell your story. And don't leave there without a clear call to action in terms of what the next steps are by asking the 2 tough questions. And as we just mentioned, core principle number 4 is having a killer follow-up system, using a CRM, getting your meetings that you've scheduled, the notes, and then creating opportunity pipeline reports to share with your boss. That is the Dakota way. Reach out to me, guy@dakota.com, if you want a signed copy. Dan, thanks so much for joining.
Thank you, Guy.
So that's a wrap on the most recent edition of the Dakota Way Sales Coaching. Thanks so much for joining, and we can't wait to see you in the next episode of the Dakota Way. Hi, everybody. Thanks so much for watching. If you have an interest in having me come in to your team and speak to your team, a lot of people want me to come in to speak to the younger groups just about the 4 core principles of investment sales based on the Dakota Way book. I'd love to do it. I'd love to see you guys, and I'd love to help out any of your teammates as it relates to fundraising and techniques to make them a world-class fundraiser. Simply email me at guy@dakota.com.